Bitcoin just broke through $122,000, and it's not just another pump. This week showed us exactly why crypto exists. As traditional markets tremble under geopolitical pressure and inflation fears, digital assets are regaining their spotlight. Let's start with the facts. BTC crossed the 122K mark with strong volume. Grayscale saw over $400 million in net inflows this week alone, the biggest spike this quarter. Derivatives funding rates flipped positive, and CME open interest keeps rising. Bitcoin dominance is now above 55%, meaning capital is flowing into BTC while altcoins are still lagging. Institutional interest is clearly back. And here's one of the reasons why. Donald Trump announced new 30% tariffs on imports from the EU and Mexico starting August 1st. The market reacted instantly. S&P 500 dropped 1.3%, Nasdaq fell over 2%, and gold and silver soared. Silver actually hit a 14-year high. This kind of macro pressure typically drives investors towards safe haven assets. And now, crypto is joining that club again. ARK Invest increased its Bitcoin exposure by 18%, and MicroStrategy added another $250 million worth of BTC to its treasury. Meanwhile, US PMI numbers came in lower than expected, pointing to an economic slowdown. The dollar is weakening, inflation is rising, and fear is driving capital into alternative stores of value. So, where is Bitcoin headed next? On-chain activity is increasing. More wallet activity, more accumulation. Analysts from Glassnode and Santiment are calling this a strong accumulation phase. Immediate resistance sits around $126,000. If we break that, $130K is a very real possibility. Strong support is holding around $117,000. Short-term volatility is expected, but the macro trend remains bullish, especially if traditional markets continue to shake. This week proves again, crypto doesn't just survive chaos, it thrives in it. Make sure you're subscribed, because the next move could come fast. Drop a like if you're bullish, and I'll see you next week with a full breakdown of the altcoin rotation and the next major macro risks on the radar.